Let's look for opportunities in the market. So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So yeah, let's look for some interesting opportunities now in the market. So we start by looking at the Boost watch list. So let's look at some commodities. You do have gold, the gold futures. So gold is pulling back. It did attempt this breakout, but it hasn't worked out so far. Looking at the dailies, it's not. It's a bit of a messy situation for gold. In terms of RSI, it is approaching a rather interesting buy zone. But we aren't fully there yet. Okay, let me actually do it like this. Let's look at so this is SLV. And quickly, the 100-day moving average here in red is pretty interesting. The pre-market suggests that we might close below that moving average. That wouldn't be a good thing, but but the 200-week moving average here in red is still working out. So silver is still looking interesting as a bullish trade, but here is gold. So let's look here at the seasonality. Usually see some weakness though into early July. Now looking at the table view, July might be bullish. August is rather bullish, so that's a promising month. But for gold, the situation is a bit messy. Let's look at natural gas. We do have a rounding bottom in development. That is certainly a bullish pattern. Looking at the dailies, pulling back a bit, but that's not really a big issue. Seasonality usually strong into mid-July, but then weakness. August, rather green. But yeah, that's NatGas, but nothing like super interesting in NatGas either. So let's look at some of the sector ETFs. Let's start with the XLI, that's the consumer discretionary sector. A bit of a bull move here, but it's a bit of a mature move. Is it shortable? July is pretty green, so not necessarily shortable. Yeah, let's look at XLF, because I want to find like a very interesting pattern. So I start by looking for interesting patterns, and when I have a pattern, then I can do like additional research. The financial sector here is below the green 50-week moving average. Also the 200 daily moving average. But we do have a bit of a move in development here, but not too much of a move, meaning we're not like super late to the party. So let's look for some additional data. Seasonality, pretty interesting into mid-July. July is the second strongest month for the financial sector. So that means that the financial sector now is a bit of a candidate. So I will just put XLF here next so that I sort of have it available. So now I want to find something else that is even better than XLF, but if I don't find it, then the XLF is the candidate. So here is XLV, healthcare sector. Yeah, not particularly interesting. The Homebuilders, XHB. Okay, so this is a very strong move, but it's so strong that it actually could be shortable. RSI in this case, pretty excessive, not extreme though. It's not like a easy short, meaning that the odds are really stacked in our favor, but they are significantly stacked in our favor. Looking at the daily data points, it's pretty rare for the home builders to go higher than we are now. Also looking at the MACD, we have a bit of an extreme reading. As home builders, okay, seasonality is not that good. So the candidate for this video is actually then Homebuilders. Homebuilders ETF, like that. And now you can sort of see how it's made. XHB. So the key signal is that we are all overbought. Definitively overbought. I think I will give this technicals a -6, pretty bearish. But we are not yet at those extreme levels that are like super shortable. So here is the list of home builders ETFs. Unfortunately for bears, we only have the nail ETF. We don't have the bearish one. There used to be a 3x bearish home builders ETF. Hopefully that one will return. Let me just double check on Direxion's website. So here are the sectors, home builders. Yeah, we do have the bullish one. But we do not have a bearish one. That's unfortunate for the bears, but the XHB, it's rather liquid, so you do have the options market, and it also is, directly shortable. But yeah, the seasonality here is clearly bearish over the last 5 years in green, 7 years in blue, and 10 years in red. It's actually bearish into the 1st of August. That's pretty good news for a bear. Looking at the table view, we had so far an almost 15% gain for June. That is the best June ever. That also means that the probability of more gains in June are reduced. Looking at July, it's recently been pretty strong. But you see here that in 2022, June was weak, July strong, but then weakness in August and September. So it's relatively rare for there to be like super strong back-to-backs. 2020 was an anomaly due to the massive crash early in the year. So we came from a much lower level, which is it's easier to have big gains from a low level, which is why buying low and selling high is a pretty good method. But yeah, I think there is so July, it is a strong month in the table view. But when we look back here and at the months where the years where July was very strong, you see that in 2008 and 9, the preceding months were very weak. Looking here at 2016, very strong, weakness before and weakness after. 2020, we have discussed 2020. 2021, decent strength in July, but then weakness before and also after. So basically, when it comes to the seasonality, I give the bulls a 1. There is some reason to be optimistic, but the issue is that we already have seen super strength for the current month. And it's relatively rare to see back-to-back performance for the home builders. Let's look at the fundamentals. I am comparing the home builders with the real estate ETF, the IER. Looking at performance year to date, home builders are massively outperforming the real estate sector, which you could also have a contrarian take on. Beta 0.91 versus 1.32. The PE ratio is interestingly much higher for real estate, assuming the numbers are correct. Much higher yield, 3% versus 0.89. Here are the holdings. Sector breakdown, market cap. Looking at price earnings, it wasn't that bad. The yield is not really there. This isn't a yield ETF. We've seen a very strong move from the home builders, significant vis-a-vis the real estate ETF. So there might be some excess here in bullish sentiment. But I will not give the bears a big one here. I think actually I might give the bears a -1 here on the fundamentals. Okay, so here is the relative performance. We start with some correlation studies. And that is to determine which sector or index that the home builders is most correlated with. Because it's towards that one where you might see inflow or outflow between them. Yeah, okay. 90% positive correlation with S&P 500, 75% with REIT, which is the global real estate ETF, 71% with IIR, the one that is more US centric, 90% with S&P 500 short term, 4% with the real estate ETF, 6% negative actually with the real estate ETF that is US focused. So the S&P 500 is actually the one we have strongest correlation with. So yeah, sometimes it's like that. And it's very important to weight correlations more than just like the sector being the same, because correlation is math, and that you need to weigh that more heavily in the financial market, especially given that quite a few ETFs might give an inaccurate picture of what they really give you exposure to. But yeah, what happens to the S&P 500 will have a very significant effect on the home builders. The S&P pulled back a bit. Now it's having a few days here with a rally, bouncing here from the 20-day moving average in purple. We have a bit of a tendency to have strength into mid-July in the table view. July is pretty strong. 4.8% gain so far for June. This is the second best June going back to 2004, which means that you should have a bit of a modest expectations of future returns. Buy low, sell high. Now we are comparing the home builders against the S&P 500. We see here that in this period, the home builders have had a very significant period of outperformance, approaching overbought levels, going pretty far back. Now we see a bit of a time cycle pattern. How repeatable is it? There is some repeatability here in the time cycles. Given the more recent time cycles, we do expect a declining phase. So a period where the home builders underperform the S&P 500. Looking at daily data points. Let's wait for the data to load. Yeah, so we did become a bit overbought-ish on the 26th of June, well, 27th. We usually see rejection and then a pullback. So there's been a pretty substantial period of outperformance. Looking at the seasonality, we usually see underperformance from home builders into later July. In the table view, the current June is the best ever by a long shot. The coming July, so recently it's been bullish, but the times where we have had a bullish July, we usually saw either some pullback in the preceding month or more modest gains. So my expectation for July would be that due to the massive performance of June and that we already are very high on the home builders, that there is a decent probability that July will be a pullback month. Okay, so when it comes to the relative performance, I think I will give the bears, give them a -4. So we end up with -2.5 in favor of the bears. We are definitively overbought. This is a very high level for the home builders. You want to buy low and sell high, and this is pretty high. And it also begs the question, okay, how much of the recent gains from the home builders has been caused by short squeezing, so that you had other people who saw that the home builders were sort of getting a bit ahead of themselves, and then they shorted the home builders. Then they had to cover their short because it went against them, a bit of a short squeeze. And to cover a short position, you have to buy positions to close, and that helps push the security higher. So I do suspect that some of the move is definitively short squeezing, which means that there could be other people in the market that also see that the home builders are really getting ahead of themselves. So yeah, I do think that there's a very decent probability here that a bearish trade will work out, but you don't want to be a part of a short squeeze. So if you go bearish on the home builders and it starts to move against you, you need to have an exit plan. You don't want to be one of those that participate in forming some blow off top short squeeze in any security. Because it's annoying to lose money when you are like really wrong. It's even more annoying when you are sort of correct, but you are, along with other people, caught in a bit of a squeeze. Because a short squeeze is not, it's not bullish. Even though the security goes up during a short squeeze, it's not bullish when you have people pushing it up because they didn't believe in the security, but they have to cover their short. I mean, that's not bullishness, but yeah. Whatever you do, of course, let the trend be your friend, be market neutral, and stay tuned for more.